Prologue. GameStop, once a chain of more than 5,500 video game stores across 16 countries, very popular in the late 1990s and early 2000s. With most games being downloaded online now, GameStop had shuttered almost 1,500 stores in the last 3 years and was fighting for its survival. Chapter 1: Revival. In early 2020, Reddit user Keith Gill, aka Roaring Kitty, saw that GameStop, despite reporting losses for the previous 2 years, still had large cash reserves in its books and decided to invest $53,000 in its stock, which for him was a minor fortune. Other Reddit users mocked him, believing that even at between $3 and $4, it still seemed like a bad investment. The critics were turning out to be right when the stock dropped to $2.80 at the beginning of the pandemic. But internally, GameStop was desperately trying to transform its once popular offline brand into a market leader in the online game space. In April 2020, Ryan Cohen, the co-founder and former CEO of pet e-commerce company Chewy, was appointed as head of GameStop and as a vote of confidence in his abilities, spent $76 million buying about 10% in the company at between $6.68 and $10.20 a share. A month later, a video posted on the subreddit WallStreetBets, GME squeeze and the demise of Melvin Capital, used a scene from the TV show Chernobyl depicting a 1986 nuclear disaster in the former Soviet Union, portraying Melvin Capital as the nuclear reactor that would blow up when the bet on GameStop went wrong. Chapter 2: Melvin's Bet. Melvin Capital, owned by Gabe Potkins, was betting that GameStop share prices would collapse even further. And by August 2020, they had taken 90 put and 1 short position on 3.4 million GameStop shares, increasing that to 5.4 million positions in the next quarter. Shorting is selling a share you don't own in the hope it falls further, allowing you to buy it back at a lower price and square up your position. Selling a put option is paying to have the privilege of buying a share at a lower price at some future date. Financial juggleries that Elon Musk made light of.
You can't sell houses you don't own, you can't sell cars you don't own, but you can sell a stock you don't own? This is BS.
By then, a subreddit thread calling to wrong-foot large hedge funds had gained traction, bankrupting institutional investors for dummies featuring GameStop. But even as Melvin shorted more and more of GameStop shares, the price kept rising, reaching $12. Obviously, there was something more going on. Chapter 3: The Play. Some of the price rise could be attributed to Cohen, who increased his stake by another 2.9% to 12.9% even as the share price rose to $14.84. But others were buying too. Cohen's purchases amounted to about 2 million shares, but Melvin Capital alone had shorted 5.4 million. The price rose again from $20, doubling to around $40 within 3 days of Cohen being formally announced as director. Redditors had kept track and knew that other hedge funds had joined Melvin Capital in shorting the stock. While ascertaining a fair value of GameStop is difficult, Aswath Damodaran, finance professor at the Stern School of Business, New York,
in a best case scenario, based on several assumptions, the stock can be valued at about $47.
GameStop's total float is 69.75 million shares, of which 19 million are owned by the founders and management, leaving a little over 45 million shares that could be traded. But hedge funds shorting the stock had sold over 70 million shares, more than what was publicly available for trade. This meant that hedge funds were selling stock they didn't have and would be vulnerable if the price rose. Seeing their once favorite store being attacked by greedy hedge funds, Redditors felt like it was a personal attack on them. If they acted in unison and acted fast, they could teach the hedge funds a lesson they would never forget. The subreddit WallStreetBets is a community that had at that time a little over 1 million active users who discussed stocks, gave tips and investment advice. Immediately they spread the word among the faithful.
Buy GameStop. However many shares you can afford, 100, 500, 1,000, doesn't matter, but do not sell whatever the market price.
As the Redditors began buying, the stock rose to $148 on January 26th, more than doubling the next day to around $350, before hitting an all-time high of $483 in 24 hours. hedge funds who had shorted the stock just couldn't find anyone ready to sell for either love or money. As by holding on, the Reddit community had sucked the liquidity out of the system. Anyone who shorted the stock at 1884 at the start of 2021 would have had to buy them back for $300 to $400 per share. Melvin Capital were forced to take a $2.75 billion loan to close their short positions, taking a hit of $2 billion as hedge funds lost a total of $5.5 billion in a matter of days. The nuclear reactors Redditors promised in their video had burst. On the other hand, Roaring Kitty, who was mocked for his buy, became richer by $48 million. Chapter 4: Wall Street's Revenge. Hedge funds are not used to such maulings, especially from amateur investors. They needed to find a way back. Redditors on WallStreetBets were largely using an online trading platform aptly named Robinhood to buy and sell shares. However, Robinhood did a very un-Robinhood thing. Instead of stealing from the rich and giving to the poor, they stole for the rich by blocking all buying of the very shares in which hedge funds were making losses, so the price couldn't rise any further, but allowed sales to happen, leading to panic selling and a fall in the GameStop price to $193.60 by the end of the very next day and to a low of $40.36 within the next 3 weeks. Redditors called out the hypocrisy. Individuals are being stripped of their ability to trade on Robinhood app. Meanwhile, hedge funds and institutional investors can continue as normal. Epilogue. Despite their questionable role, the controversy has benefited Robinhood as more than 3 million people downloaded the app in January. WallStreetBets community got so much attention that for some time they set their message settings to private as their members increased from 1 million to almost 10 million. But nothing else seems to have changed since the 2008 financial crisis, and large hedge funds still dominate and control the US financial market. Because while hedge funds get bailed out by billionaires, if the Redditors had lost, they would have had to nurse losses on their own. This overcoming of odds made some call this achievement equivalent to the storming of the financial Bastille. But they forget that just like the crowds that stormed the Bastille during the French Revolution, burned the prison and killed the governor, they soon turned on each other. Redditors too are falling over each other to sell movie deals of the events, 6 of whom met secretly in a Discord chat room. By the way, BISBO is also on Discord. Please join us there by clicking this icon on our channel. We hold weekly meetings to discuss our stories. One moderator got in touch with Ben Mesrick, the author of the book that became The Social Network, who apparently secured deals to write a book and help with the movie about the GameStop saga. WallStreetBets community's founder Jamie Rogozinski added more fuel to the fire when he separately announced his own book deal. Moderators talking to movie studios then attempted to boot out other moderators like ZJZ, who questioned them for secretly trying to profit from the deal.
They are trying to undermine us.
Perhaps the most famous short squeeze of all time is that of Volkswagen, whose ordinary shares had risen sharply as compared to its preference shares on news of an acquisition attempt by Porsche. Hedge funds in 2008 lost $30 billion when Porsche's purchases left a free float of only 6%, while sellers had shorted 12%. In another case involving Tesla recently, short sellers who had for long kept the stock low were left sitting on mark-to-market losses of over $40 billion during its recent rally. Bonus chapter: What about India? Can something like this happen in India? Not really. For one, the Indian version WallStreetBets, an Indian stock market, has just 15,000 or so investors, unlike the 10 million now on the US version. So weak are they collectively that when they tried to pump up ITC, Yes Bank and Suzlon stocks, some traders reportedly lost 40%, leading the moderators to backtrack. Secondly, intraday filters limit stock movement to 20%. Once the limit is reached, the circuit is reduced to 10%, then 5%, and then 2% of the previous day's close. In India, the net position in any stock cannot exceed 20% of its free float, unlike in the US where it can exceed 100%, as was the case with GameStop. The stock lending and borrowing mechanism, the core in the GameStop fiasco, was launched in India in 2008 but hasn't picked pace for tax and other reasons. Further, no one can hold overnight positions more than 5 times leverage. Let's leave you with a feel-good story of the 1980s when a bear cartel tried to short Dhirubhai Ambani's Reliance Industries. Initially, they had success in driving down the share price, but just like the Redditors, a group called Friends of Reliance Association bought and held the shares, supporting the stock. Panicked short sellers could not make delivery at the time of settlement, losing 3 crore rupees, resulting in the halting of trading for 3 full days, making Dhirubhai Ambani a legend on Dalal Street. The Redditors on WallStreetBets are also hailed as heroes, with their chat being analyzed in articles and YouTube videos to find the next big investment bet. BISBO's limerick: David slayed Goliath on the banks of Wall Street in an online forum where Redditors meet. An audacious plan was hatched by a clan. In the ensuing battle, the hedge funds got beat. Do join BISBO on Discord and follow us on Instagram at GoBISBO.